Happy Tuesday and welcome back to PreciseAlgorithmTrading.com. It is Tuesday, June 27th, 2023. I am your host, Dave, and let's just dive into the markets and try to keep this simple for a night. So, this is the S&P 500. It was up by 1.15% today, and I have zero idea what the news was that was supposedly driving the markets today. Um, I'm a big believer in momentum and just basically the buying and selling of things, and that's what drives the market. So uh, we got into an oversold territory, and at least just interim, short term potentially oversold territory, and we bounced, and that's what's going on the SPX. And over here on the left hand side, I want to spell this out. Look how far away we are right there, this space down to the purple line. That's on the weekly chart. So this is also, I mean, it's minor to my overall trading, but that arrow down it is an indication that this is wanting to go back down, potentially all the way to here. But I just like what we were talking yesterday. I expected this to run into on the right hand side over here, run into this purple line, and at least stall there. And we got a bit of a reversal. That doesn't mean that this thing can't roll over and then still make it down here to these lines because they're all stacked up together. Um, but here's one standard deviation up and down, and we've got 3 trading days left in the week. So um, my point, I guess, is I expect this to get down to here in the next few weeks, but we are jumping into a new um, cycle, and July is right around the corner, and I've been talking about those statistics for a bit. July is generally a good trading month. All right, moving on to the Dow, which is up by 0.63% today. I want it to be seen that like all these indications, short term, these are all red candles, and we have down arrows going on. So there's a down arrow. It lines up with that down arrow, and it's the day after that down arrow, and these are all red candles. So um, does that mean we can't move higher? Certainly not. Does that mean I expect us to get hit right there and stay, or maybe even shop around here for a bit before it has a chance to go up? Yes. So I can tell you something else. This True Momo indicator, when it's above zero here, it's more bullish. So if it comes back down and goes under zero, that's more bearish. So like the fact that this is going down, but it's still above zero, leads a potential for like what we had back here. This barely got it oversold before it went back up again. Overbought and oversold. That's what they call it in the markets. You can see things get well oversold and then go to well overbought. Sometimes they don't. They only like do a little dip like that, and um, I think it's significant when that happens because it leads to basically the when I'm talking about buying and selling in the markets, like there's a level here now, and there's a level here that the price has to get through, because like this level that was here, it came up to it, pulled back from it, and then had to break through it again, like to get over that. So now, if this is a level and this is a level and this needs to break down through it, it's got to break through that level that's right there. It shows up in a lot of indications. It's this green box here. It shows up with all these lines. Those are all support lines, and even just one and a half and 2 standard deviations away, let alone our Harvard lines, Bollinger Bands. Yeah. So hope that makes sense. It's got probably just as many obstacles to the upside to break through, but right now a lot of the pundits and talking heads have been talking about, how terrible the world is, and everything's on fire, and these markets have been going up, generally speaking. And we're into the Russell here. Everything's red, but same kind of story here. So we got a nice reversal today, 1.46%. And the weekly charts are more bullish than the actual daily charts are. So, and the Nasdaq is probably it ripped higher by 1.65% today, and it's interesting to me how little that is on a candle. That's not that big of a move, but it is big when you look at like what it does to some of the markets. I mean, it just props up a lot of markets. Now, can this come down here, come up here, come down? I'm going to tell you, I don't think it's going to give up this line without a fight. And but we do have some pretty bearish things going on here. So if it's going to roll over, it's like I say, it's going to roll over, fight around here for a bit, potentially come up, and then even come down and create something, maybe potentially a cup and handle pattern in this zone where we come down and then do something like that. And that could take a couple of weeks, but anyways, that could happen on any of these charts, especially since we're playing around with 52-week highs again. The 10-year note, as a measure of inflation, it's dealing with the same issues. We got, well, let's mush this down a little bit. Well, the 52-week high is quite a ways away, and we're literally like, I'm going to go ahead and do this again. Draw a box. There's a box. I didn't do that right. Well, since I don't know how to use this tool, but I'll draw it around like this. There's a box, and what we're doing is coming up into this and building up some steam. With my impression would be that we're going to go out of the box eventually to that side because of this bullishness, and because that's where we came from, and we're going to go sideways and then continue on. That doesn't have to happen that way, but so the 10-year note, as far as like inflation goes, it's actually saying we got potential for some more. You're getting back up here into this zone for inflation. I don't know what economic trigger that's going to take, but that's not necessarily good news. But this thing, if it starts to think about rolling over and dying, that would be actually probably better for the markets. So, and oil. I'm just going to use the USO contract. So we're red again. I don't think it ever got out of red on the actual futures contract. Yeah, it did a little bit. So we're red again, and again, I drew one of these boxes even on that, and you can see we're still hanging out in it, and have been for 2 months. So back here at USO, it's actually I have a stop set because I'm not going to wait around for it, and I think, well, we could set our stop underneath this whole box, or actually drilled down into a 1 hour time frame and figured if it comes up underneath this pivot, then I am going to get out. Sure looks bearish on everything that I can see, and that means I just want to get out, but I'm going to let the price play out that way. And all right, TLT. So bonds, and really the same story. We're inside this channel and see what happens. A little bit of a down day today in that one. Flip over to stockcharts.com, type in bullish, look at the bullish percent indexes, and I'm going to buzz through these pretty quick. So down 4.55% on the Dow, that's pretty significant. Up 0.31% on the NYA, that's not very significant. The transports didn't move. The NASDAQ down by 0.42%. The SPX down by 0.65%. It's okay, not terribly significant. OEX down by 4.84%. That's pretty significant. It takes 6% for these boxes to reverse, so if that tells you anything. I think the NDX is my last one, and here we go. This is what we talked about last night. So we literally have a point and figure sell signal now on the NDX. So this is the NDX. Went down by 5.08% today. Added on those two O's. Before that, we had, this is a point and figure buy signal because this column of X's exceeded that column of X's. Now we've got this column of O's that exceeds this column of O's to the other direction. So that creates, the path of least resistance now is down, at least until we get to about that line. So now, does that mean that we can't just reverse again in a day or two or 5 or a week and a half? No, probably not. We probably can. I don't know. Here you go. There's one where it happened like that. Reversed back up to a column of X's, turned into a column or a point and figure sell signal at that point. And then I don't know what the catalyst was, but this thing rallied for what looks like a couple of weeks because it went from this 7 right here to this 8 right here, and it had a big rally in the middle of that. I hope that helps everybody understand how these things work a little bit. So I'm saying the NASDAQ's going to probably have trouble getting up and going from here for a while, and that's fine if the Dow and the S&P actually can advance while that's going on, and they can prop up this market, and then this market turns around and can possibly prop up those markets. So, all right, and then on to our automatic trading systems, and I'll start at the top again, like with the YM, which is this thing. We got a nice little bounce today. It's nothing to really write home about yet, but it's better than what it was yesterday. So what I need to see is this. I need to start seeing these peaks here get broken to the upside. This is our equity. So these are actual results of after our trades, and we haven't had a new green equity dot since back here. But again, this back here, this is last year in June, the end of June, beginning of July. This is this year, end of June. So it'd be nice if we just get going. And we just took a 4-month hiatus, and that's what I'm shooting for. So this is a nice little pop again today to take back some of these losses. This was a big loss, and then today we had, I think, one nice trade, and that one nice trade goes from whatever that is, 11,000 to 15,000. So like I say, nice trade. Of course, these are terrible trades when it was taking it all away. Now we hope it starts to give some back and maybe pick back up again to the point that it looks like this. So that one trade is literally that right there. So, and then the NASDAQ, which is still my favorite, even though it's taken me behind the woodshed here lately. This is a series of trades back up again after we got throttled for a little bit. But again, and actually I was thinking about this, this is 1226 to 627. Wait a minute. Yeah, that's fine. Let's flip down here. This is 6 months, or I'm sorry, 12 months of data. So it's 626 to 627. The 12 months of data. We are like this. We were like this back then, and we have rallied right nicely out of that. So this thing should just continue roughly at this trajectory. And with that, I will leave you guys for the night and hope everybody has a great evening. Take care.